In a world where poverty seems like an inescapable trap, few dare to challenge that fate. But imagine for a moment how your life would change if you could turn every penny into an opportunity. Warren Buffett, one of the most successful investors on the planet, has a formula that can change everything. But is this formula only for the rich? What if the true key to wealth was in your hands, just waiting to be discovered? Before we begin, type in the comments, "I'm ready for my financial transformation." Now, pay attention. The journey to wealth isn't a fairy tale, but a map filled with practical and accessible strategies. What separates those who thrive from those who remain stuck? Is it financial education, mindset, or perhaps the choices we make every day? Every decision counts, and every step can be a rung on the ladder to success. In this video, we will explore how you can apply Buffett's investment principles, even if you're starting from scratch. Are you ready to open your mind and discover what really makes a difference? Get ready, because the transformation might be closer than you think. Investor mindset. Developing an investor mindset is essential for anyone seeking financial freedom. Warren Buffett, one of the most successful investors in the world, emphasizes the importance of cultivating an investment-oriented mindset. This means not just focusing on immediate profits, but considering how each financial decision can impact your future. This mindset requires discipline and commitment, as investing is a journey, not a destination. It's crucial to understand that the financial market can be volatile and often challenging. Therefore, cultivating patience is a critical skill. The investor mindset involves resisting the temptation to act impulsively, especially in times of uncertainty. Instead of reacting to price fluctuations, a disciplined investor stays focused on their long-term goals, basing their decisions on rational and well-founded analysis. Another aspect of this mindset is recognizing that knowledge is a powerful tool. Buffett has always advocated that an investor should continuously educate themselves about the market and the assets they are interested in. This helps build confidence in the decisions made and minimizes the fear that can arise during periods of volatility. Financial education thus becomes a central pillar of the investor mindset. Moreover, this mindset isn't just about seeking financial gains. It's also about understanding your own risk profile and how it influences your investment choices. A wise investor acknowledges their limitations and strives to align their investments with their values and personal goals. This self-assessment is a crucial part of developing an investor mindset. Ultimately, an investor mindset means seeing opportunities where others see challenges. Buffett is renowned for his grounded optimism and his ability to identify companies with growth potential that are often undervalued by the market. This unique perspective is what allows an investor to achieve significant returns over time. Financial education is the foundation upon which a solid base for investment success is built. Without the right knowledge, making financial decisions can become a guessing game, filled with unnecessary risks. Therefore, investing in financial education is an essential step for anyone looking to venture into the world of investing. Beyond understanding how financial products work, it's crucial to grasp the principles that govern the economy and the market. One of the first areas to explore in financial education is understanding how investments work. This includes learning about stocks, bonds, funds, and other assets. Informed investors are those who can identify opportunities and risks more effectively. When you understand the different investment options, your decisions become more strategic and aligned with your financial goals. Moreover, financial education helps avoid common pitfalls, such as excessive debt or investing in volatile assets without a clear understanding of the risks. Knowing your financial limits and learning to control spending are fundamental aspects that contribute to a healthy financial life. This not only enhances your ability to invest, but also promotes greater financial security in daily life. Teachings from figures like Warren Buffett reinforce the idea that learning should never stop. He frequently reads books and studies companies, demonstrating that financial education is a continuous commitment. Market changes and economic trends require investors to stay updated. Therefore, the pursuit of knowledge should be a constant priority, regardless of experience level. Finally, financial education also plays an important role in building a healthy investment mindset. By understanding how investments and personal finances work, an investor becomes more confident and less prone to impulsive decisions. This confidence is vital for navigating market uncertainties, allowing you to stay focused on long-term goals, even during turbulent times. Long-term investments. The long-term investment strategy advocated by Warren Buffett is a concept that deserves special attention. Many people are drawn to the idea of quick profits, but this approach often leads to significant losses. Buffett's philosophy is that true success in investing comes from patience and the discipline to hold onto assets over time. Instead of chasing immediate gains, he recommends building a solid portfolio that can grow and appreciate in value over the years. Investing for the long term allows investors to harness the power of compound interest. This financial principle can turn small amounts into substantial sums over time. The longer an investment has to grow, the greater the potential return. This long-term perspective also helps to smooth out the impact of market fluctuations, enabling investors to ignore short-term volatility. Moreover, the long-term strategy is closely tied to analyzing companies and identifying assets with sustainable growth potential. Buffett is known for his ability to evaluate companies based on solid fundamentals, such as the quality of management and market position. Investors who adopt this approach tend to focus on companies with a track record of consistent performance and growth prospects, rather than being swayed by passing trends. Adopting a long-term investment mindset also means accepting that there will be periods of uncertainty and even temporary losses. However, the resilience to hold onto investments can translate into significant returns in the future. Those who succumb to fear and sell their assets during times of crisis may miss out on valuable opportunities for recovery and growth. Ultimately, long-term investing is not just a financial strategy but also a life philosophy that promotes careful reflection and analysis. In a world where immediacy is often valued, Buffett reminds us of the importance of thinking long-term. This applies not only to investments but also to other aspects of financial life, such as saving and planning for the future. Portfolio diversification. Portfolio diversification is a fundamental concept in the world of investing, and according to Warren Buffett, it is one of the keys to reducing risk. The central idea is that by spreading your investments across different assets, sectors, and even geographies, you protect yourself against the volatility of any single one. Imagine putting all your money into one company, and for some reason it faces financial difficulties. In this scenario, the impact on your wealth could be devastating. However, if you have a variety of investments, losses in one asset can be offset by gains in others. Additionally, diversification doesn't just mean buying a little bit of everything, but rather understanding how different assets behave in relation to each other. Some sectors may benefit during times of crisis, while others may thrive during periods of economic growth. This makes the strategic allocation of your investments essential. For example, while technology stocks may offer high growth opportunities, assets like real estate or commodities can serve as a safeguard during uncertain times. Buffett also suggests that diversification should be done wisely. It's not enough to diversify without understanding the investments you're making. Therefore, it's crucial that each asset in your portfolio is selected based on careful and informed analysis. This involves studying the financial health of companies, their growth prospects, and other factors that might impact their performance. This approach not only helps protect your wealth but also enhances your chances of achieving returns. Another point to consider is that diversification can help smooth out the emotional roller coaster that investors often experience. When you have a diversified portfolio, it's easier to stay calm during periods of market volatility. Diversification acts as a buffer, allowing you to focus on your long-term strategies rather than reacting impulsively to short-term fluctuations. Finally, it's important to remember that diversification should be an ongoing practice. The market is constantly changing, with new sectors emerging while others may become obsolete. Therefore, regularly reviewing and adjusting your portfolio is essential to ensure that you continue to be protected and that your wealth is maximized over time. Fundamental analysis is a powerful tool for investors who want to make informed decisions. This approach involves examining the financial and operational aspects of a company to determine its intrinsic value. Buffett is a strong advocate of fundamental analysis because he believes that by understanding a company's financial health, you can identify investment opportunities that others might overlook. For a beginner investor, This might seem intimidating, but it's actually an accessible practice that can be learned over time. One of the main components of fundamental analysis is the evaluation of a company's financial statements. This includes analyzing the balance sheet, income statement, and cash flow statement. These documents provide a clear view of the company's profitability, liquidity, and ability to generate cash flow. By examining this data, an investor can understand whether the company is financially sound and has a sustainable business model. Another important aspect of fundamental analysis is assessing the industry in which the company operates. Understanding the market context and the company's competitive position can be crucial to the success of the investment. For example, a company might be growing rapidly, but if the entire sector is in decline, it could indicate that the trend isn't sustainable. Therefore, understanding the bigger picture is essential for making informed choices. Additionally, fundamental analysis also involves identifying qualitative factors that can impact a company's value. This can include aspects like management quality, organizational culture, and innovation. Often, these intangible characteristics can be the difference between a company that thrives and one that struggles. Therefore, a diligent investor should consider not only the numbers, but also the nuances surrounding a company's operations. In the end, fundamental analysis is a practice that requires patience and dedication. It's not about finding immediate results, but about building a solid foundation for long-term investment decisions. By mastering this technique, you can become a more confident investor, capable of identifying valuable opportunities, and thus increasing your chances of success in the market. Patience in the world of investing. Patience is a virtue that can be difficult to cultivate, especially in an environment where news and market fluctuations are always in sight. Many people feel tempted to act quickly, whether by selling their stocks after a sudden drop or buying in a panic during a surge. However, as Warren Buffett often emphasizes, the true investment strategy is not to react impulsively but to remain calm and trust your initial analysis. This means that investors must be prepared to face volatility without succumbing to the temptation of making hasty decisions. Patience also reflects the long-term view that an investor should have. Investing is not a sprint, it's a marathon. The best investment opportunities often require time to develop. A patient investor understands that companies may go through cycles of growth and decline, but over time, fundamentals tend to prevail. By maintaining a long-term perspective, the investor can ignore short-term fluctuations and focus on future growth potential. Another aspect of patience is the ability to resist social and emotional pressure. In a world where everyone seems to be chasing quick profits, it's easy to get caught up in the fear of missing out. However, it's essential to remember that many of the best investment decisions come from careful analysis, not from reacting to passing trends. A patient investor understands that time in the market is more important than trying to time the market. Moreover, patience is tied to the willingness to learn from mistakes and adapt. Investing is not an exact science, and there will be times when decisions don't yield the expected results. A patient investor views these moments as learning opportunities rather than definitive failures. This growth mindset helps build the resilience needed to navigate market uncertainties. Ultimately, patience is a crucial component in building a solid portfolio. Instead of chasing quick gains, an investor who values patience focuses on assets with real long-term appreciation potential. This approach not only helps avoid unnecessary losses but also increases the chances of achieving significant returns over time. Persistence is one of the fundamental pillars for achieving financial success, especially in the field of investing. Rather than being discouraged by difficulties or market performance that doesn't meet expectations, a persistent investor stays focused and continues to pursue their financial goals. This mindset is essential, as the path to a successful portfolio is often filled with challenges and setbacks. Persistent investors also understand the importance of staying informed and up to date. The investment market is constantly evolving, and new opportunities arise all the time. Those who persist in their financial education and are always seeking additional knowledge can identify trends and opportunities that others might overlook. This willingness to learn and adapt is a hallmark of successful investors. Moreover, persistence involves the ability to overcome doubt and uncertainty. During times of economic crisis or political instability, Many investors might feel pressured to sell their assets or change their strategy. However, persistent investors critically assess the situation, revisit their strategies, and remain steadfast in their decisions based on research and analysis. This approach prevents impulsive decisions from being made during stressful times. Persistence is also reflected in the ability to continue investing even when results aren't immediately visible. Many investors give up after a series of losses or underwhelming performance. However, history shows that success often comes after periods of adversity. A persistent investor believes that, with time and the right strategy, positive results will eventually come. Finally, persistence is key to building a diversified and sustainable portfolio. Instead of being discouraged by market fluctuations, the persistent investor uses these moments to reevaluate and adjust their strategy, ensuring that their portfolio remains aligned with their long-term goals. This continuous and dedicated approach to investing is what ultimately leads to lasting financial success. Now that we've explored Warren Buffett's formula, let's consider how you can apply these principles to your own life. Remember, becoming wealthy isn't just about accumulating money. It's about transforming your mindset and habits. Are you ready to take the first step towards your financial freedom? Think about a small action you can take today. Could it be starting to invest a symbolic amount? Or perhaps seeking knowledge about a new sector? What will you do to change your trajectory? Every choice matters. And don't forget, the path to wealth isn't a sprint, it's a marathon. Patience and persistence are your best allies. How can you stay motivated during challenging times? What if you set monthly goals and celebrate each achievement, no matter how small? Before we wrap up, I want you to ask yourself, who is the person you want to become in 6 months? Visualize this version of yourself and use that as fuel to keep going. Share your thoughts in the comments, and don't forget to subscribe for more valuable tips. Your journey to wealth starts now.